Folks, today I'm going to talk about how you could find value with large cap financials. Now, the stock market continues to trade near all-time highs, and momentum is clearly the approach that's benefiting swing traders and position traders right now. Now, we're also starting to see a bit of madness by way of the short squeeze, like stocks like GameStop, AMC, Cost, BlackBerry, to the moon and back almost as fast. Moreover, as of this past month, the S&P 500's Shiller price-to-earnings ratio is just shy of 35. Now, the Shiller P/E ratio is based on average inflation-adjusted earnings from the previous decade. This reading of 35 is the second highest we've seen during a sustained bull market uptrend over the past 150 years, okay? Second highest in 150 years. It was topped only by the dot-com bubble, where the Shiller P for the S&P surpassed 44. And sentiment levels are not that far behind. The number of stocks in the S&P 500 is trading above the 200-day moving average, and is close to 90%, which is the highest level in over a decade. And the Nasdaq 100, it's giving me extremely similar readings. Lastly, small caps have begun outperforming the broad market, which is a sign that larger stocks may start lagging behind the smaller stocks for the foreseeable future. That's why we need to start focusing again on value, especially if the S&P 500 may be stalling at these levels for quite some time. So the first stock on my radar is Ameriprise Financial Services, ticker symbol AMP. Ameriprise Financial is the leading diversified financial service firm with more than $800 billion in assets under management. Almost $900 million, actually. Billion. Though the extensive wealth management and asset management capabilities, they advise and manage to protect the assets and income of more than 2 million individuals, small businesses, and institutional clients alike. Revenue for financial advisory operators are projected to go from $57 billion to $200 billion in the next decade. One driver of this is the digitization of the industry. But then there's the impact of the baby boom generation, which is a population of 75 million people. This group will demand more services to help with retirement, such as finding ways to live off of their current assets. During the past 8 years, earnings per share have nearly tripled, and the company has returned a hefty $15 billion back to the shareholders. AMP stock is also selling at a discount, with forward P ratio of only 11 right now. As for dividend, it's at 2.1%, which means the company has cash. Stock has generated over 20% in the last 12 months, and I believe we'll see substantial upside in the next few months. Next stock, Morgan Stanley, ticker symbol MS. This is the preeminent global financial service firm that maintains leading market positions in each of the 3 primary businesses: securities, asset management, and credit services, with a return of 33% over the past 12 months. Not bad for a financial company. Fundamentally, the company has shown solid growth. During the latest quarter, earnings jumped by 51% to $3.39 billion, or about $1.80 per share. And revenue were up to about 26% to about $13.64 billion. That's nothing to sneeze at. There was strength across all of the company's businesses. However, the biggest bright spot was the investment banking division. Told you that would happen about a year ago. The revenue soared by 46% to $2.3 billion. About $1 billion came from equity offerings, and Morgan Stanley stock is still trading at a discount valuation. Consider that forward price earnings ratio is only at about 12. That means you're buying it at a bargain. Overall, I'm not seeing much upside in traditional savings and loan stocks, but 2021, insurance sectors and investment banks should see sustained momentum and growth, especially in the first stage of the financial recovery that I'm expecting to begin second part of 2021. Both stocks are in fact not, I repeat, not rebound stocks. They're exhibiting momentum right now, and they're selling at a really low PE ratio, which is making them a really good bargains right now in the financial space that's trying to break out. Keep your eye on non-traditional savings and loan banks if you're looking at the financial sector as a whole. And I hope that helps. Folks, have you noticed how stocks fall and are written off by traders and then randomly, Out of nowhere, they skyrocket. That's all thanks to modern day kingmakers. But who are these kingmakers? And how do you get in on the action before they send the stock soaring? Good questions, right? Well, stock market expert Adam Sarhan has the answers, and he's finally ready to reveal how you could take advantage of the massive moves by the kingmakers. All you've got to do is click on the link below to see this renowned trader and what he has to say. Make sure to like this video and subscribe to the Wealth Press channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when we post our next video.